Hello and welcome. You're watching Business Today Television. I'm Sakshi Batra and this is What's Hot, a show that focuses on the biggest buzz on the day straight. And top of our focus today is the warming up of the FIIs who are getting again attracted to the Indian markets. You are looking at funds finally pouring in after months and years of, we've seen FIIs pulling out from the cash market in heavy quantities. We have seen in the first week of February that FIIs have net bought the Indian market. So far, 6,077 odd crore rupees have poured in. Of course, not a very huge amount, but at the same time, giving us slight indication that FIIs are maybe returning to the D street. We will also focus on textile stocks. Remember, over the last couple of sessions, we've been focusing on how on the back of the US-India trade deal, it's the textile stocks, the export-oriented companies that are showing a lot of promise and the stock prices have been soaring high. But again, after those 2 to 3 days of a move, they have taken a beating today. There are fresh fears surging that once again, maybe Indian companies may be at a losing competitive advantage to neighboring nations. We will be focusing on that. Of course, earnings have taken center stage. We will be focusing on stocks like BSC and Navin Fluorine, as both the shares have hit record high levels after the Q3 earnings, and analysts and brokerage houses are raising the target prices on both these stocks as well. Of course, Titan, as ahead of the earnings, again has hit a fresh record high. We will focus on the expectations there too. We will also focus on the pharma stocks as amidst earnings and news flows. The entire pack seems to be in focus yet again. And from the new age tech stocks, it could be Lenskart that is in focus in the eyewear space again, as Citi has initiated coverage, but the valuation capping could be capping the near-term upside as well. So that's something we will be focusing on. Let's actually welcome our guest on board. Mr. Sudeep Bandyopadhyay, the Group Chairman of Inditrade Capital, is now with us on the show. Warm welcome to you, sir, and thank you so much for taking the time out for this special conversation. I want to begin by understanding on the FII move first. From 1st of February till 9th, most of the days we have seen that FIIs have poured in either a minuscule amount or as high as 5,200 crore rupees in a single session as well. Finally, we have a net purchase of around 6,000 odd crore rupees up until now. Do you see the case that FIIs may be now finally returning to the D street, and what could be in the offing for the markets if that happens?
Well, I think, Sakshi, we knew, and we have been always talking about this, that India-US trade deal had been a very, very significant sentiment changing event, and once that got announced, plus the contours of the same were released, I think, over the weekend, I think FIIs have got the confidence to start investing in Indian markets. Now, there are a couple of things which I think will make them come in full flow, which is the valuation as far as Indian stocks are concerned. Corporate results have been by and large in line with expectations, and in some cases, particularly in BFSI, better than expectations. So I would suspect that FIIs will gradually, they won't come like a flood. They will gradually start investing in India, and that's pretty much what is happening. In small doses, they have started coming in, and they will. Now, we also suspect that they will be predominantly focusing on the large cap universe at this stage, and later on, when the valuations still look better, they may venture into mid cap and small cap. But at this stage, they will slowly and steadily start entering the large cap universe.
Slowly and steadily, but first on the large caps and then gradually over the mid and the small caps is how FIIs could be returning to the D street. Let's also focus on the markets overall. How do you see the current levels? Where do you see the upside? Which are the pockets that are still offering you some valuation comfort? Because most of the major events are out of the way. So how are you approaching the markets among various sectors and opportunities right now?
Well, I think we have been discussing this for some time, that India-US trade deal changes the dynamics for multiple industries. Yeah. And some of them, you talked about textiles. We can keep talking about aquaculture. We can talk about gems and jewelry. These all shot up. They were on the circuit, 20% circuit level for a couple of days, and they have already probably factored in a lot of benefits of the deal, and hence we are seeing probably a little bit of correction, a little bit of concern emerging in those stocks at high valuations. But one sector which we are pretty confident, and the results of the sector also proves that, has been chemicals, agrochemicals, specialty chemicals. This is one space which was completely bombed out. It was performing very badly. The competitive pressure was intense. All the levers were kind of missing. But things have started slowly and steadily improving. And remember that China plus one, how the sector came to limelight, very much holds true even today. Also remember that most of the companies export between 25 to 50% of their production to US and Western world. Now, the India-US trade deal is definitely a shot in the arm for this sector. Things have been otherwise also improving as far as the sector is concerned, and performance clearly shows that. We talked about Navin Fluorine, the results. You can talk about multiple other company results. All of them have shown signs of improvement. Valuations are still, I would say, reasonable compared to many other sectors. So, one can look at picking up selectively in this space for long term. We do like UPL, which is the fifth amongst the top 5 agrochemical companies in the world. They have a global business and things have started improving. You can look at Aarti Industries. I think the expansion has been pretty on track, and they have increased the expansion amount also, so that obviously the company is confident. Performance has been good. You can pick up multiple companies in this space, and we believe that I think there is significant upside going forward.
Absolutely. Let's also focus on the key segment of textile stocks. We've been discussing the big impact that we have been anticipating. Most of the companies have also come out and said that they welcome the 18% tariff, and they do see this as an opportunity for them to improve their market share, margins, profitability going forward. Also, several other deals that are happening with the EU that has happened, and with the UK that is in the offing. They also believe there are now newer markets that are opening for them. So over the next few years, there is an opportunity for the textile companies to double down on their capacity expansion and probably look at these opportunities to increase revenues and profitability as well. But today again, most of the textile stocks have fallen after last 2 to 3 days of a move on the upside. There are fresh concerns that Bangladesh's ongoing trade engagement with the US could actually alter the sourcing initiatives in the regional textile supply chain, with potential implications again for the Indian cotton as well as the yarn exporters, particularly as some of these have actually secured zero duty access in the US as well. How do you see these fresh concerns?
Well, a couple of things. One is, I think these stocks had run up quite a bit post the trade deal announcement. So some amount of profit booking correction was expected, and I think it's par for the course. Okay. Number two, these companies operate in a competitive global market. So competitive pulls and pressures will always be there, and they have to be cognizant of that. Number three, I think, we today, on the face of it, we have an advantage in terms of being the lowest, duty, which amongst the peer countries, whether it's Bangladesh, Vietnam, China. So there is a distinct advantage on paper at least, but things can change, and things can change dramatically. So yes, some amount of caution is again required, and pretty much that's what is happening. US is engaged with multiple countries, and we know with this current US administration, things change overnight. Tomorrow morning you may find a tweet, removing the duty in Bangladesh or imposing a duty on Bangladesh, or things change dramatically. So these companies have an advantage on paper today, but they have to tread with caution, and I think that's the way to go. So yes, valuation correction was warranted because it ran up too fast, and that's pretty much what is happening. I would say that EU and UK trade deals are given. I don't think much is going to change there. But as far as US trade deal is concerned, things will always remain fluid. Let's put it this way, because we have seen what happened to South Korea. There were a lot of exemptions given, and then suddenly it was imposed. Duties were imposed back. So we have to be prepared for volatility, and I'm sure the companies are factoring in that.
So what is the best way of approaching the export-oriented sectors at this point in time amidst all of these trade deals? And we are also given to understand more such deals will be in the offing. So over the next for 5 years or so, as people are anticipating a huge amount of trades to take place, bilateral trades with various countries. How does one really bet big on such spaces and at the same time remain hedged when such volatilities take place?
Well, the only trick is to pick the stocks, not at the top level, which is what happened with the 20% circuit for consecutive days and all that. So you have to let these stocks correct a bit, then you have to pick the stocks. I think there is absolutely no doubt that there is a significant opportunity for these companies to scale up their exports and their business, which will be good for these companies as well as the economy in terms of employment and multiple other vectors. But having said that, I would also say that you have to remember that this volatility is going to remain. And you have to be prepared for volatility. Let's say you pick up a Gokuldas Export or a Welspun or Indocount. You pick up at wait for the little bit of correction and then pick up the stocks. Be prepared for volatility and be prepared to remain invested for a few years. If that is the metrics under which you are operating, I'm sure you will make a lot of money.
Okay. And beyond textiles also, are you looking at any other export-oriented sectors that may offer some opportunity? Have you pulled out any key names for your clients?
Well, as I was saying, chemical, agrochemical, specialty chemical, these are also significantly export-oriented industries. So UPL has been our favorite. Aarti Industries is a favorite. Navin Fluorine also we have been recommending some time back, and that continues to remain on our favorite list. So one needs to look at this sector, and I think there are significant opportunities coming going forward, and these are much more steadier sectors because the supply chain once established is very difficult to tweak and change from both the sides. So it's not that overnight they will lose large business, but yes, cost competitiveness is of paramount importance, and India has an advantage provided the duty rates remain stable.
Okay. In fact, you took the name of Navin Fluorine. The stock has hit a fresh record high after stellar Q3 numbers. Most of the brokerage houses have again covered the stock on a positive end and are seeing up to 18% upside on the stock from the current levels as well. Jefferies, Nuvama, UBS, they all have buy ratings on Navin Fluorine stock. Although Citi has a sell recommendation, but all of them have actually raised their target prices on Navin Fluorine from the current levels as well. So that's one definitely that we are looking at. The company definitely posted its third quarter profitability by 122% to 185 crores vis-a-vis 84 crores seen in the previous year. Same quarter, the revenues have increased by 47% as well, to about 892 odd crore rupees. That's keeping the stock definitely in focus today. The company's EBITDA has increased by 109%. So the core operational profitability factor is also improving. In fact, the margins have also improved substantially from 24.3% to 34.5% as well. The specialty chemical segment, like you were pointing out, sir, was up by about 60%. So that's where the core profitability is getting the jump from Navin Fluorine as well. From here also, from the current levels, do you see still, that one can take an opportunity to buy post the earnings?
Oh, absolutely. I think it's too hot today. Maybe wait for a day or two, things cool down a bit, then buy. Buy for long term. As I'm saying, this entire sector is going to be re-rated over the next few months and quarters maybe. The potential is huge. And I mentioned that originally this started as a China plus one. That logic remains still dominant. In between the pulls and pressures of global trade as well as this unnatural duty imposition have changed the dynamics. But once it's coming back, the duty rate structure becomes normal. I think the potential for India to deliver on these spaces is huge, and pretty much all the large Western consumers of their products are interested in procuring from India. So these companies will have solid business going forward as well, and these are long-term bets. This is not that what happens tomorrow morning and what happens day after. These are long-term bets. You can bet on this industry for the long term.
It is a long-term story, viewers. In case you want to invest in Navin Fluorine, even at record high levels, it would make sense, but wait for a cool off and then enter. But your time horizon has to be long-term, because that's when you will truly see the re-rating impact to set in as far as the entire sector of this space is concerned. Other companies also, rallying to fresh record highs post the earnings. BSE has hit a fresh record high post the Q3 results. Analysts here are raising the target price and are seeing up to a 26% upside as well. Headline numbers were largely higher than the estimates. Transaction charges have definitely lifted the revenues, but it's just the regulatory contribution that has dragged the margins a tad bit here. So just wanted to take your view here also as far as BSE is concerned. We have seen a 30% increase in turnover sequentially. The average daily notional turnover has increased by 28% to 210 lakh crore rupees. Its average daily premium turnover was up by nearly 30% at 19,459 odd crores as well. So that's something that we are looking at. Of course, we are seeing that the operating income increased by 16% for the company, 1,244 crore rupees as well. EBITDA increased by 13%. Meanwhile, we have actually seen this higher regulatory contribution dragging the margins, and the contribution was up by 28% sequentially. The margins contracted to 62.5% vis-a-vis 64.7% in the preceding quarter. However, brokerages like UBS, Jefferies, Nuvama, they've all raised the target prices on the stock, up to about 3650 for UBS as the target that is coming in. Jefferies has a 3050 rupees target. Nuvama has a 3760 rupees target. That's the highest one that we have got among all the brokerage houses here. The stock is up by almost 6% after the earnings. On BSE, finally, things returning to past glory. How would you look at BSE?
Well, a couple of things. I think, it has run up quite a bit now. With the result getting announced, it has run up really quite a bit. There are headwinds which the BSE has to navigate. Both the government as well as the regulator SEBI is trying to bring down speculation, and which translates into kind of reduction in F&O volumes, which will affect BSE's business to an extent. So one has to be cognizant of that. And these are factors contributing to the volatility. But on the positive side, I think overall trading environment and overall market participation is increasing. Financial inclusion is happening at a rapid pace, and these all helps BSE. Also remember, NSE is going to get listed very soon, and NSE's listing will obviously happen on BSE, which should contribute to a significant increase in volume both in the cash market and going forward in F&O as well, because NSE will expect it to be a heavily traded stock going forward. So that should be a boost for BSE sometime during the next fiscal. So by and large, I would say that BSE, around current levels is properly priced. Some excitement can take it to higher levels, but at current levels, it is appropriately priced. Now, if you are an aggressive investor, maybe still you can enter and wait for some of these events which I talked about to happen and benefit out of the price upsurge which may happen. But be prepared for volatility if you are participating in BSE. On the exchange front, if I have to recommend one stock, I will probably still recommend MCX. I think they have more growth vectors at this stage, and a lot of new contracts in the commodity side are getting introduced on a regular basis, and the opportunity for introducing more contracts are also significant. So maybe if somebody has to take an exposure on an exchange at this stage, MCX still can be looked at.
Okay, got that. MCX can still be looked at as within the exchanges if you're looking for an opportunity there. Two other stocks that we will discuss on the back of earnings. One is SBI. Again, it hit a fresh record high yesterday after the earnings. We've seen again multiple brokerage houses raising the target prices. The stock hit a fresh record high, and of course, the PSU banks, they again came back into focus after the earnings. Today, there's slight profit taking after that strong move yesterday of 7.5 to 8% on the stock. But let's try and understand what's happening here on State Bank of India, on the PSU banking space. How would you really look at the opportunities that present?
Oh, I think it's a brilliant opportunity, and I've been talking about it for the last 1 year.
Yes.
SBI definitely deserves a buy, and even at current level, I would dare to add. Look, it's still quoting around 1.7 book. whereas a Kotak Bank quotes at 2.93 time book. While I'm not saying they should be quoting at the same multiple, but the valuation gap is still glaring, and there is enough opportunity for that gap to be bridged. Look at the performance. I think every single parameter they have done well. The management body language also is very, very confident as far as credit growth is concerned for the coming quarters as well. Asset quality has been sterling. I think it's probably one of the best asset quality they have disclosed in last many years. Remember, all the subsidiaries are doing well. Some of the subsidiaries are going to go the IPO route very soon, which should lead to value unlocking again for SBI. So, to my mind, I think it's a perfect situation for them for attracting better valuation and delivering stellar performance going forward as well. Some of the other PSU banks also have performed very well. Leave aside PNB and Canada Bank, who kind of disappointed the market a bit. Most of the other banks, whether you look at Bank of Baroda, whether you look at many other banks, they have performed very well. And remember, the valuation gap between private sector peers and PSUs do remain pretty much in all the cases. So there is a logic, there is a case for the valuation to move up for pretty much all the PSU banks.
Okay, fair point. So that's the overall view on the PSU banks, and on State Bank of India, even at record high levels, it would make sense to enter afresh as well. Let's talk about the earnings that are going to be coming in, but the stock has already hit a fresh record high ahead of the earnings, and that is Titan. We have seen the stock hit, jump by 2% to hit an intraday high of 4,237. The announcement of the results will come in definitely today, and we have been discussing the gold and silver prices and the jewelry related purchases that have taken place, and now finally when we are looking at some easing from the top peak of gold prices as well, how would you really look at the opportunity here in Titan at record high levels? What is your expectation on the Q3 results and beyond, and what should investors do?
Well, I think the results are definitely what we are looking for. The results, business numbers had already come, so we are looking at the margin and the profit performance, and that will definitely be keenly watched. There are a lot of pulls and pressures. As we know, the gold prices has shot through the roof, which may lead to shrinkage in the volumes, but the value obviously has gone up, which is very clear from the business numbers which have been disclosed. Now, as far as Titan is concerned, I also want to highlight that they've got multiple other businesses which all are moving in the right direction, as was apparent in the last quarter as well. And the Q3 being the festive quarter for which the results will come out, we expect the other businesses also to contribute contribute positively and start contributing more and more. So whether you look at the watches, whether you look at the spectacles, whether you look at the saris or this some other emerging segments, I think they all are contributing to Titan now, and performance is improving. Overall, we have been positive on Titan for a very long time, and if you are a long-term investor, I think there is no harm in buying Titan. Remember, it is quoting at a 90 kind of a P multiple.
Yeah.
But yes, the growth also has been scorching, and the way the overall business scenario and dynamics is shaping up, I think they will continue to deliver good set of numbers in the near future as well.
Okay, fair point. So that's something that we're going to be watching out for, viewers. But within the same segment, let's also discuss Lenskart. You talked about the eyewear part of Titan as well. Lenskart has come in as a big disruptor in this space, with its presence that's growing both nationally as well as internationally as well. Citi has initiated coverage now on Lenskart today with target price set at 500 rupees. Currently, it's quoting at 467. They do see about a 7 to 8% upside from here. They believe in the strong business model. The execution is definitely praised here. Valuation, however, they believe that could be capping the near-term upside. But why Citi likes Lenskart is due to the structural shift in the eyewear space, the eyewear evolving into a lifestyle category largely, how it's integrated the manufacturing and the D2C model, the tech-led focus, the data-driven supply chain, and the strong opening channel presence months as well. Let's find out, what should be one's approach on Lenskart too. Vis-a-vis Titan, what should be the approach there? Of course, Titan has a much larger conglomerate. Lenskart is just purely focused on eyewear. But like Cities pointed out, that as a lifestyle category, as it is emerging, completely focused on tech, how would you look at Lenskart? Also, how would you put the valuation angle here?
Well, first of all, I think I disagree with the tech part because it's a brick and mortar business. There's absolutely no two ways about it. You use tech on the back end to deliver some services, which pretty much everybody does. You speak to Titan, they will say they also use tech, but it's not a tech company. It's a brick and mortar company which you and I go and use their products and services. So it's not a tech company. So we don't want to give a tech valuation. And the problem with Lenskart has been they've been deserving and they've been demanding and they've been trying to get a tech valuation. So I'm a little skeptical on Lenskart at this kind of elevated multiple. They have diversified into international markets and probably that's a good step because definitely they've changed the way people look at eyewear retail as far as India is concerned. They definitely have done that and that's why they're getting a valuation. And they can try doing the same thing in multiple other neighboring countries, which is what I think they are trying to do, and I think that's a great move. But as far as the valuation is concerned, I'll be very, very careful. I don't think we should buy into Lenskart at this level. Let's wait and watch. Let performance improve. Let the profitability deliver. Let them deliver on profitability and deserve and get to deserve the kind of valuation they are commanding today. It's a lot of excitement and hype at this stage. So I will stay away from Lenskart.
Stay away from Lenskart. That's the caution there. So viewers, definitely keep an eye out on this. Let's also focus on, as the time is just getting over, but we'll also squeeze in the pharma space right here. Why most of the companies are actually in focus today. Pfizer came out with the earnings again. Profitability jump of 11%, revenue up by 20%, EBITDA improved by 55%, margins also improved to 35% from 27% earlier. Strong demand across the key therapies is what we've seen for Pfizer. Cipla is in focus. US FDA here has conducted a pre-approval inspection at the units and two Form 483 observations have actually been given. We've also seen Lupin with a US FDA inspection update. It's completed the CGMP inspection and what we are given to understand is that observation relates to procedural deficiency, no data integrity or product quality issues that have been flagged there. Oro Pharma has come out with the earnings again. Net profit up by 7.5%, revenues up by 8%, EBITDA up by 12% and margins at 20.5% vis-a-vis 19.8%. Let's try and understand what's happening in the pharma story. What are you looking at within the pharma space right now? How are you judging the opportunities there, sir?
Well, pharma is a long-term opportunity and they have delivered stellar results over the years for the investors. I am a little cautious on the US focused pharma companies even now, though probably to a great extent that concern has been taken care of by multiple steps and multiple announcements of the current administration, but still I'm a little cautious and I want to remain cautious on the pharma companies which are focused on US markets predominantly. So I like domestic focused pharma companies, and remember domestic pharma is also growing at about between 25 and 30% CAGR, which is a fantastic rate of growth. So I like companies who have a strong domestic business, and I recommend buying into that kind of companies. Some of the companies they're large and they have both domestic as well as international business, and definitely can be looked at from a long-term perspective. So amongst the larger players, Sun is what I like. Sun Pharma is what I like, and they are in the process of bidding for and acquiring a very large conglomerate in US in the pharma space. If that works out, probably it will be a game changer for Sun Pharma again. They have been growing through acquisition even in India, and I think that this international acquisition probably will change the nature of the company itself and give them a different growth vectors. So I am confident about Sun Pharma from a long-term perspective. It's not tomorrow, day after, but long-term perspective. One should look at some of the other pharma companies which have got very, very diversified business and not too dependent on US, and that's what I would maintain.
All right. Okay. Thank you so much, Mr. Bandyopadhyay. Always a pleasure seeking such wonderful insights from you for all our viewers. Appreciate your time. Thank you so much and all the best to you. We'll see you very soon on another edition on Business Today. Thank you so much. All right, viewers, we'll wrap it up on that as far as what's hot is concerned. We're 100 points higher on the Nifty, so going is strong, 25,970 at this point in time. Sectors, most of them are positive with PSU banks looking at slight profit taking today. But among the stocks that are buzzing clearly, Tata Steel, Eternal, Tech Mahindra, Geo Finance is among the top movers on the Nifty. We just have about 10-12 stocks again that are on the lower end. Bajaj Finance, Shriram Finance, Dr. Reddy's, SBI Life. These are some of the stocks that are dragging in the trade today. But we will continue to focus on the biggest buzz on day trade. So stay tuned with us. I'll be joining you now at 12 noon to answer all your stock related queries on daily calls. So don't miss out on that one.